I am going to ask you some tough questions today, questions that a lot of first-time home buyers have. I see them all the time online, and I hope you're ready
I'm
for.
ready.
Okay, welcome to Your Marana. I'm your host, Liz J. I come on here to answer real questions from buyers and sellers, share local Marana area insights, and bring in trusted experts to help you better understand the home buying, selling, and home ownership journeys. No gatekeeping, no sales pitch, just the information you need to make confident decisions. Let's get started. Jesse, who are you? What do you do?
Jesse K. I'm Jesse K. Loans, so I'm a local mortgage lender.
Okay.
And I work with NEXA Lending, and we have access to over 300 wholesale banks. So we try to find the right loan program for each person and not try to shove anybody into a little box.
Since we're celebrating June as National Homeownership Month, in terms of first-time home buyers, what does that mean for someone who's brand new to this? Like, when you have access to that many products, like, how does that help someone who's looking for their first home?
Well, because it really comes down to it's like a giant math equation, right? So we're looking at their debt to income as well as what their income is on a monthly basis,
Okay.
what their debts are. So different programs have different guidelines. So it may be that they don't have the full down payment. It may be that their credit score isn't great, but they have the down payment. It may be that they're not a U.S. citizen. There's just lots of different obstacles that can come up in the loan process, and
Okay.
with all those different products, we're just able to find the right product for the client.
Awesome. Very good. So, comparing what your access is to other lenders, how does do other lenders have, like, if I go to Bank of America or Chase or one of the big banks, like where most people have their checking account, what's the difference between going in there and asking for a loan for my first home versus asking you?
So the difference is going to be, for one, the products like we talked about. So you're going to get a much bigger portfolio of products with me, whereas you might not get the right loan if you go to the bank.
Okay.
The second part would be just the process. So when you work with me, you're working with me and my processor. So there's two people involved. When you start working at a bank, they have different departments for different things. So you're calling 1-800 numbers to get paperwork, send paperwork in. It's just going to be a little bit more confusing process. And then there's always the if something goes wrong in the loan, and things come up on credit, things come up on bank statements. When you're working with that bank, they're probably just going to tell you they can't do the loan. Whereas I'm going to find another lender to come in there and save that deal, and we're going to get it done.
My first question is as a brand new buyer, when they call you, what does that conversation look like? Like, do they need to tell you their credit score right away, or like sometimes people are so scared they don't even want to call you? So
Yes, I can feel that on the other side of the phone.
so for those people who've never called a lender before and they don't know what to expect, what are some expectations that they can have when they call you or any other lender to help kind of reduce that fear?
Yeah. So when someone calls, it's really just an open conversation to start. So we're just asking, what are they? How's their living situation now? Are they paying rent? How much are they paying? When is their lease up? What's their job situation now? Do they get a W-2? How much money do they make every month?
Okay.
Are they self-employed? Bank statements. Just trying to get an idea for where you're going to fit, what we need to explore, what questions we need to ask more. Once we get that kind of preliminary information right off the bat, kind of get an idea of what their debt to income is. We don't really need to know the credit score.
Okay.
I'm not so worried about the credit scores. We have lots of programs for that. We're more concerned about their debt to income. And if based off of what they tell me, their debt to income looks okay, then we're just going to ask them to fill out an application. It takes 5 to 10 minutes. It's very simple. And from there, we do a soft pull credit. So it's a soft pull, so it doesn't show up on a credit report.
Okay.
It doesn't affect their score in any way. But from that, I get all their liabilities. I know their credit score. They provided me their income information.
Mm-hmm.
So from there, I'm really to be able to get an idea if they're able to find a loan that fits for them.
Awesome. Very good. So for the folks who have a low credit score and they have always wanted to call someone like you, but they're super fearful because they're afraid of judgment, or maybe they're afraid of like, oh, I'm never going to get out of this. Like, I'm always going to have bad credit. What would be the one thing that you would want them to know, take away from this conversation?
I mean, probably the biggest thing is that it's not as bad as they think it is usually.
Okay.
They usually think their credit is really bad and there's no chance. You'd be surprised on how many times we were able to find a way to happen right off the bat.
Awesome.
Secondly, I mean, that's my job. I look at credit all day long. I'm looking at people's, underneath their covers. I don't hold any judgment.
Yeah.
You'd be surprised. I think everybody goes around thinking that everybody else they're hanging around has good credit.
Yeah.
And I'll tell you, it's probably not the case because most people don't. So
Okay.
like most of the people you're hanging around, they have similar situations as you. You just don't know about it. So there's no reason to feel shameful in any way.
Awesome.
I've had bad credit throughout my life. It happens. But the biggest thing is that when they come in and open up and they fill out that application and we run that soft pull, they'd be surprised. I'll give an example. Just a couple of weeks ago, I had a gentleman. He told me right off the bat, "There's no way I can buy. I won't. I just want to know where I'm at," which everybody should do. And it turned out all he had to do was pay off a $180 collection bill. That was it.
Gosh,
And
wow.
it brought his credit score up almost 100 points. So you just can't assume that everything's not going to work out, because in the long run, the way that the system is set up is they want you to be approved. The system is set in your advantage. Okay. They want you to get into homes. So if there's a way, we're going to find it.
Awesome. Very good. I like that they want you to get into homes.
They do.
Yes.
They do. If you look at the guidelines and the rules, they're really not trying to find a way to disqualify you. They're really trying to find a way to approve you. If you look at any of the guidelines, FHA, VA, conventional, they really want to find a way to get you into that house.
Another common question I've seen online is, how much money do I need to actually buy a home? Are those zero down programs like a real thing? Can I actually get into a home with no money at all in my savings? Like I can just $0 get into a home. Like how does that work?
So it's totally possible.
Okay.
It is going to be somewhat it does somewhat depend on the real estate market, right? Because typically, if you can ask for seller concessions, that can help cover some of the closing costs. Closing costs are typically going to be anywhere from like $9,000 to $11,000.
Okay.
But if you can get seller concessions with the market that we're in right now, a lot of realtors like yourself would say that they can get those for the buyers to help cover their concessions. And then for the down payment, so depending on the loan product, we have products that will do 3% down for a conventional loan, 3.5% for an FHA, and then we have VA and USDA options that are zero down. But even outside of that, we have down payment assistance options, and those can help with up to 5%. So that would cover your 3.5% down, as well as contribute some to the closing costs. So the answer is really, depending on the market, like a market we're in today, it's totally possible to get into a home without paying a single penny out of your pocket. Outside of, you do have your inspection for your home, you have your appraisal, that is something you have to pay for, your credit report. There is a couple things that you do have to pay for. So in reality, maybe it would cost you $1,500 to $2,000 out of your pocket if you did get everything else covered. So there's a small amount of cost, but generally it can be almost zero.
What's the biggest mistake that you feel like first-time home buyers make before they even start house hunting?
Oh, it's by far assuming. They assume things.
Assuming,
so
okay.
They assume that they'll be qualified. They assume that their job is going to work for the loan.
Okay.
They assume that they can get approved for this much.
Okay.
There's just a lot. I see it all the time. People assume things, and then when we really start diving in and we look at things, I can give you an example. We had a buyer a couple of weeks ago. He was here. He wanted to buy this house. He said, "Yeah, I got a great job, W-2, everything." Sends in his paperwork, and I see that his job is in Washington State. And so he was planning on, he doesn't have a remote job. So he was going to quit his job after he got the loan. And obviously that's not going to work. So he thought it was no problem because he had a job at the time. He could show that he had made the money. And then after the loan closed, he was just going to move out to Tucson and find a new job. Well, that doesn't work. And so there's, again, is an assumption. We did find a way around it. So everything worked out. But things like that, when you have a realtor out there shopping and spending their time, and the homeowners are spending their time looking for a house in a certain price range, and they don't even know if they could qualify. And usually they're just assuming things. So don't assume things. Come talk to a professional, and then we can get you the real knowledge.
Gotcha. And that's actually a good thing for most people who are going to be watching this are looking to relocate possibly to Arizona. So that's actually a great point to make, because I relocated here from Arizona 5 years ago, and I didn't really know the details of like, oh, do I need to have a job there first, or can I go remote in my job? It's actually a really good question, because some people want to move just because they want to move. They want better climate, etc. And so having those questions answered, I feel like would have been way more helpful for me in my research moving here. I feel like that's kind of like a hidden
Yeah,
hidden
and one
thing.
thing, just to piggyback off that,
Hmm.
one thing I see is people think they have to have their job for 2 years to get a loan, and that's just not the case.
Mm.
So in that same example, you could move out here, get a new job, and if it's in the same line of work and the pays as much or more, we can get that qualified. That's not a problem. So as long as you're in the same line of work, there's ways around those things. So again, if you assume that you have to have a job for 2 years, which I hear that a lot, you might be getting some bad info and you might be missing something. So.
Yeah, I think I used to think that, and then I realized that if your job is in the same like comparable field,
Yeah,
it's okay.
yeah, yeah,
Gotcha.
yeah,
Okay, very good.
yeah. So there's ways around it, and also if you don't qualify for a conventional FHA, VA, a government loan, we have lots of non-qualified loans. Which it sounds scary when I say non-qualified, but all that means is they don't have to play by the same rules as the government programs. And so there's bank statement loans, asset loans. There's lots of different ways to get things done, even if you have a sticky employment situation.
Yeah, that's what I tell people when I recommend them to call you. I say, he has access to so many products. I can't even keep track of all of them. And he's going to be your source for figuring out what works for you
Exactly.
because it's so detailed. It's not cut and
Yeah.
dry. It's
Yeah.
not just like a 1, 2, 3 path choice. It's like a hundreds of different choices.
Yep, yep, and it is. I can see, like, so when you come to me, you can go to a local place here like Nova's. They do a great job. Nova's a great company, but you're going to see one set of products from Nova. I'm going to look through 300 different Novas throughout the United States,
Oh.
try to find that product that really fits what you need, because not everybody's the same. Not everybody's situation is the same.
So next up is going to be a question that I believed for quite a long time because my own mom induced me into believing this, which is, do I really need 20% down to finance a home?
No,
We kind of went through
we
this
kind of went
already.
through this. Yes, yeah,
Yeah.
absolutely not. Definitely do not need 20% down. No, like we said before, I mean, you can go as little as 0 down with down payment assistance options. And some of those options are forgivable loans, like they're grants, so you don't even have to pay them back. I have over 30 different down payment assistance options. So there's just lots of different stuff out there that you can choose from. And maybe you don't need the full 5%, you only need the 3%. Because there is a little bit of difference in interest rate when you use these products, because obviously they're giving you money. But when we can do all the math and look at all the different options and try to find the best solution for you.
How do I know what monthly payment is comfortable versus what I technically qualify for? Because I think there is a little bit of difference there. And right now, a lot of talk is like, the payments for mortgages are higher than most people's rent. Why should I even buy? So how can someone measure like their comfortable level versus what they're qualifying for?
Well, that can be a very difficult conversation because there's a lot of different moving parts. But probably the first thing that I do is I ask what they're paying for rent at the time.
Okay.
So we want to get their mortgage payment close to what their rent is, unless there's some sort of change in circumstances in their finances, or if we can see that they're putting a lot of money in savings every month. Obviously, that's fine. So
Gotcha.
the other thing to consider that nobody considers is the tax benefits. So I'm not a CPA. I would advise you talk to your CPA or your tax professional. There's a lot of tax benefits that you get with owning a home. When you look at the benefits after the first year, when you get to have that break on your taxes, it might change your mind.
If I'm renting now and I don't think I can buy, what's the one thing I should do in the next 12 months to help get me on the path to a better position?
Fill out an application with a loan officer, 100%. Like I said before, it takes 5 to 10 minutes at the very most.
Okay.
We're going to run a soft pull. It won't affect your credit in any way. It won't show up on a credit report. But that way we can give you a game plan. We can see exactly where you're at. You might not even know. You might be ready now and just not know it. But at least that way 12 months from now what you need to do and what you need to accomplish. And we do set up credit repair plans. So if you need credit repair, that's something we can do. We'll stay in touch with you throughout the process to make sure things are going the right way. And just get you on a path to get that credit score right. Or maybe it's a down payment. Maybe you just want to understand what your monthly payment's going to be so that you can prepare for that. And because maybe it is a little bit more than what you're paying now in rent. But there's no harm in filling out a 5 to 10 minute application and letting us do all the work and just giving you a game plan.
So it doesn't hurt their credit score to fill out
Absolutely
the
not.
application. Okay. And can we link the application in the description below?
We absolutely can. They just need to go to jessiek.loans/Liz S. Right? There
Yeah.
you go. There's your link for your
Yeah.
application.
So I'll link that in the description below if you are serious about filling out that application and seeing where you stand. Question off the cuff for you. What Do people sometimes find strange things when they fill that out? Like, are
The
they surprised?
application.
Yeah, like,
So I've actually had 2 in the last 3 months that found fraud on their accounts. Yes. So talk about wanting to be
wow.
prepared. So it actually affected one of the buyers. He actually had to buy a house with a low. So he was moving here, so he needed to buy. Couldn't wait for it because it does take some time to
Fix
fix
this,
these
and they
things.
had no idea.
I had no idea it was on his credit report
So they
until we
had
went to.
open lines of credit under their name,
So
or
for this one, it was actually they had a car. They had bought a car. They bought a Lexus and owned it for about a year and a half, and then it got repossessed.
oh my
So they even
gosh.
made the payments on it for a small amount of time. So yeah, so he had a $20,000 debt that was on his, and the way they stated on his credit report was that the payment was $20,000. So they really made it hard on him to get a loan. But we worked through that. Actually, it only took us 10 days to get it off of his report for the actual loan. So we did get it through. We didn't have any delays. But it did affect his credit score, and that's something that if he had known 6 months before, he probably would have had a better score, and we wouldn't be looking at doing a refinance here shortly down the road. So it didn't work out 100%, but that's another reason to get those things checked early.
Coming off of Reddit, this person says, fear of buying at the wrong time. I know they say you need to just buy to get yourself in the market and get started, but I have a lot of fear about buying at the wrong time right now. The housing market just feels so unpredictable. I have been seeing a lot of listings for people who bought in the 22, 24 era. Pause right there, AKA the unicorn years.
Yes.
Unpause. Trying to sell and having to price drop to less than what they bought their home for. Then on the flip side, I see people who bought pre 2020 selling absolute pieces of crap garbage for 300K plus more than they bought for. I'm honestly fine if I sell one day and just break even, but I'm so scared there's going to be a housing price correction and the home I buy is going to drop 100K from what I bought it for because I fully believe so many houses are listed for way more than what they should be. We hear that a lot.
Yeah.
So how would you address that fear?
Well, there's a couple things there. So one, like you said, the unicorn years, you're talking like 2006 to 2008. You're talking about 2022.
Yeah, like the COVID time was.
You could argue that she has some sort of, somewhat of a point, because if you did buy in those years, you might be in that situation, but a lot of people aren't as well. So, but the biggest thing is like, right, then you were seeing multiple offers. You were seeing people buying houses over asking. So when you're looking at people that can't get what they want to, sell their house for what they bought it for, they may have bought it for overpriced in 2020, 24 or 22 is what it was. So, and we're not advocating to pay more for a home than what it's worth. So that'd be the first thing, is get with a real estate professional that knows what the value of these homes are, can steer you in the right direction and make sure you make an offer on a home that's actually worth what you're paying for it. Secondly, when you look at the value of homes and the big picture of things, it might take some time, but they always go up. And my first question would be for this person is, are they looking to be a first-time home buyer, or are they looking to be an investor? Because right now they're paying rent, and every single penny of that rent is paying somebody else's mortgage. So whether the house is overpriced or underpriced, right now they're paying 100% overpriced because they're not getting anything for their money. And so when you look at, the long scheme of things, things typically go up. Also, I always like to quote Warren Buffett. He's, one of the richest guys in the world. And
it didn't happen by accident.
Yeah, right? It didn't happen by accident. And he famously says that the mortgage is the only one-sided bet you're going to get in life, right? So it always favors you. So when you're betting on a mortgage, when the rates go up, you get to keep that rate. So now you got a better rate than everybody else. And when rates go down, unlike most things in life, you can say, no, thank you, and you can refinance and get that lower rate. Yeah. So it's a one-sided bet. It favors the consumer 100 times out of 100. So in the long scheme of things, if you're looking to buy a home to live in and create some equity and maybe get that next home, you really can't go wrong. Now, there might be a different timeline for you and someone else, depending on when you buy, as far as when you get to that point in equity, yes. But sometimes down the road, you're going to have that equity, whereas if you're renting, it's never going to happen.
Right. And I want to add to the unicorn years that it's for the person who does, for the non-realtor, for the non-lender, for someone who's just exploring their options, one very easy way to figure out if you're overpaying for a house is the demand. Because if there's 4 or 5 or even one other person fighting, meaning like we're all kind of putting in how much we're willing to pay for that house over asking, that's a very easy sign to figure out if you're overpaying for that house.
Yeah, if you're waiving appraisals.
If you're waiving appraisals, if you're
I just saw a deal like that the other day. They had a bidding war. It ended up closing 50,000 over asking. They waived appraisal, and sure enough, appraisal came in at listing price,
right,
exactly at the listing price.
Yeah.
So they paid 50 grand more for that house than they should have. They got what they wanted, and sometimes that's what it takes. But
we're not really seeing that in the Southern Arizona market.
No, that's going to be, and again, it's sometimes it's a little bit of luck. A couple people find a house at the same time that they like, and every once in a while you find that home that people just draw to. This was one of those. But yeah, we're not seeing that in this market.
No,
we're just not. So if you're a first-time home buyer, this is the market you want to buy in, because interest rates, you might think they're high. You look over the history of mortgages in the United States, this is about average where they're at usually. And then secondly, you get to go find that perfect home right now. Liz can tell you, that home that you've always thought about, it's out there right now. You can be picky. You don't have to settle.
Yep.
When rates come down, prices will go up, and you will have to settle on a home, because I've done it more than once. I've bought in markets like that, and you end up settling. You don't get what you want.
Yeah.
But right now you can take your time. There's tons of homes to look at. You can negotiate, and then you can always refinance if you're really worried about the rate.
Yeah, and the homes right now are sitting so much longer on the market than they have in recent years. So it's exciting to me because I can have a buyer who's super picky, and they wait even a month sometimes, and they can still write an offer on the house because no one else wants it.
Yes. They don't have to. They can have that one house, and they can come back 30 days later.
Yeah, it's a beautiful thing.
Yep, and that won't always be that way.
No, it won't. But hopefully, it stays this way for a long time.
Yeah, this is the great market for first-time home buyers. It really is. It's not a great market for investors, and that tells you everything.
Yep. Awesome. Well, thank you so much, Jesse.
Yeah, of course. Okay. Thank you.
We'll talk next month.
All right. Sounds good.
Okay. Craving more insider information and local insights for the Marana area? Subscribe to my channel and hit the notification bell so you never miss a single episode. If you're looking to relocate to Southern Arizona, buy your next home, or sell your current one, click the link in the description below to text with me directly.